Welcome everyone to the Kindle Report. Here we are, starting to get crazy. Wednesday was another wild day. As I mentioned last night, I thought we would see some further declines. I mentioned a number, 40.60. There was a number right at 40.69, 68, and then down to 59. So we did bounce a little bit out of there. We're up just a touch right now. We're up to 40.83. So there's a bit of a bounce right at the close, and then after the close and the reopen, we continued to move up. 1 second. Excuse me 1 second, folks. Sorry about that. I could hear myself and delay in the background, so apologize. Anyway, yeah, so interesting day. I said don't think that the banking news is over, and of course, First Republic down another 20, we'll call it 30%, 29.8. So that's continuing to decline. And it's possible they're just going to end up closing that thing and selling it off. It's one bank right now. There's probably other banks with issues, but nothing like at the size or like this. So as I said last night, I just don't see this as a 2008 scenario, but it's certainly going to drive the algos. And I mentioned that last night. Did see someone commenting, and you'll see here in the technicals here in a few minutes, there's still some more downside. Our database reacted pretty good. We're down to some key metrics to pay attention to. So a lot of deterioration going on right now. And it is interesting, though, but the bears are starting to rally back and say, we failed 21 times now. Get ready to go for the big decline. And we also supported 21 times, basically. So we've been in this trading range, as I've been talking about for a while. Just a couple reviews. Google gave up all the gains. Microsoft continued up yesterday, so that helped the NASDAQ. The NASDAQ was up pretty good numbers there for a while, and then it just faded off and ended up 0.47 with the S&P down 0.38. Russell continues to deteriorate. Why? Because of those regional banks that are in there. And like I said, there's still some small and mid-cap stocks that are really performing well in spite of what that index is doing. And there's just a lot of banks in there, a lot of regional and community banks in there. And possibly I'll show you some of the, we'll go through some of the numbers since this seems to be what's going on at the moment. So let's take a look. I'm just looking at some of my other notes. Yesterday, I mentioned that I expected to see mortgage apps go up. They did, up 3.2%, and durable goods up 3.2%. And actually, I wrote this number down wrong. I believe it was 9.7 was the mortgage apps, not 3.2. I duped that number when I was making my notes tonight. So it was a big number. We're continuing, as I've been talking about, is we're really just seeing the residential market just flatten out here. And so let's look forward till tomorrow. We'll get GDP. Q1, first estimate of Q1 expected to come in at 2.0. I titled this video, Will GDP Surprise? I don't have any clue. Like I said, it's expected at 2.0. The numbers and some of the things we're seeing in the technicals and including the database is starting to deteriorate to a point where it's starting to get a little concerning. As I mentioned yesterday, we got an exit on that long position we had on the ES. That's gone. We're neutral on everything on all these indexes. So no positions long. We still have our intermediate database is still looking fairly good. It'll be interesting to see as we come into Friday if we get any type of backfilling there. We're around 66% bullish if we start to pull back in there. I'll discuss that probably Sunday night when we come in. So what's the other thing that's out there? Little noise there on the debt ceiling, so that's going to become noise as well. So definitely, as I mentioned last night, there's some headwinds ahead, and looks like there's still some pretty serious support that we can hold for a little bit. I'll go through that. I went through the weekly charts last night. Those are key numbers, and that's right at that 50. I believe that was the 59 number. I'll review it here in a minute. But we also had another number at 40.25, which was a possibility here. So we finished yesterday. We're trading right now at 81. We'll see if this thing can hold. I'll set this up as we go through technicals. So just looking at my notes here, yeah, I think for the most part, just to talk a little bit, if GDP continues to come up at anywhere near 2%, it's going to be hard to argue for the recession. And I'm on record as saying I don't believe there's going to be a recession. It doesn't mean I don't think the economy couldn't soften. I just don't think we get a couple quarters in a row of GDP. I didn't change my definition of a recession. I kept the original one that I've had for 40 years. So I'll stick with that. But for right now, we're starting to see a little rotation, but it's the bank story reemerging again. And this First Republic story will go away, and not sure how it's going to go away. I know they're having some issues with accessing some of the facilities at the Fed with the discount window, all that. Listen, they've got, I guarantee you, they've got Fed observers inside their office right now. Okay, they're not operating on their own anymore. So they have got federal officials on site, I guarantee you. And I know maybe if Dr. Baker comes in, he could comment on that as well. But I'm pretty darn sure there's folks sitting in that office right now, probably even overnight. I don't think they're sleeping a lot there. So it's being watched pretty closely. Is there going to be contagion, something that happens? Anything's possible, folks. Listen, I don't claim to have, although I do have a crystal ball, I don't know how this is going to play out, but I don't see it systemic, and I think this is the final issue to deal with. And then, as I said last night, banks in general are not necessarily a very good business, and you can look at they go through cycles of good and bad, and they're more bad. Like I said, I compared them. It's maybe unfairly I compared them to airlines last night, but they are difficult to deal with. So I don't think it's going to take very long to get through the stream tonight. Let's go through the Wavetech database. And wait, before I move on, I just realized claims are coming out tomorrow. They're starting to rise a little bit, so maybe we're seeing a little stressors starting to come into employment. They're expected 245. Continuing claims at 1.865 million. My magic number is over 2 million. If they get above there, then that'll start to maybe affect some of the forward-looking or expectations on employment. But for right now, they are looking like they're going to go up. And we have pending home sales coming out. They're supposed to be up 1%. I think they're going to come in better, actually. Everything in this residential housing seems to be really stabilizing, in spite of everybody saying that people aren't going to pay 7.25% for loans. Year over year, everything's off. There's no doubt, but there is definitely some stabilization going on there. So let's go ahead and get into the database. Okay, we're at 41.86. You've been around the channel for a while. You know that 42 is the magic number. So we're just under there. As I mentioned a few minutes ago, we did get the exit on the long position. We were long from 4,008 until yesterday. So we made about 100 points on that trade. Not too bad of a trade. There's no follow through. There were a lot of expectations. I saw somebody, I think right at the end of the comments, I think it was FF, said, what happened to the 4,400? 4,400 is still out there as a valid mark. Like I said, I don't see us going into a major decline here, but I reserve the right to change my mind. We have plenty of positions. As right now, we have 6,500 stocks on a short-term basis. On a longer term, on the intermediate, we still have 10,000 stocks, but most of these indexes are flat right now. So the whole thing that I showed you, where we're just going sideways to flat, is a continuing theme from that standpoint. So we did get 2,878 sell signals for tomorrow morning, 191 buys. So in the last 2 days, we've seen 3,600 yesterday, 2,800 today. So we're looking at 7,000 stocks rolling over here. So it's pretty material, to say the least. And like I said, this is the magic number here, right at 42. So 41.86. We'll see if we get any kind of stability. Still looks a little sketchy when we go through the technicals here in a minute, as far as the next several days, I guess, as we come into the end of the week, next 2 days anyway. All right, so we'll start with the hourly chart on the S&P. Once again, you folks have the indicators. Man, that was a great trade off last night. Just declined right off of the around. Got a nice sell signal, and then the turnaround came in, and right as we came into that final hour, we did get a little bit of a bounce there, coming right into the close, and it followed through after the cash markets closed, and we saw some follow through. So what we're looking at right now, we're still got some decent downward pressure right now. PPM1 on the hourly is a minus 0.29. That's trend mode down, and we're probably going to stay under this 10-period moving average right now. And we're looking at the potential of, let me just take a look here, probably looking for moving down toward that, retesting the lows. I'll go through the market grid here in a minute and show you what that looks like. I'm just going to put on something here real quick. Bear with me 1 second. I'll put this on here right now. This is what I just put on, is the market grid on the hourly. And one of the things that happened yesterday, we traded right into that STX number. It was pretty amazing there on as the markets traded. But we're just looking at the patterns. Once again, probably the 72 level will be key. Let me bring up the numbers here, and so you can see them. And this is the hourly here. So let me put the daily up. And so we look at the daily. We're looking at, if you recall yesterday, let me go over to TradeStation. It's a little better visible there. Let's go over here. Put this up here. This will be a little easier for you to see. And yesterday, we got down, the 61 was S3. We got down to 68. So we were trading right down into that number yesterday. And if you recall, I said if we can't get above the R2 number, then we're probably going to fade. Well, 16, when we were talking last night, when we were live, that was the high of the session, and they faded him off. And coming into London, they sold him off just under the 4,100 level, bounced a little bit, then just declined into the U.S. Open and continued from there. I think we printed 88 overnight prior to the Open, but we look to today. Now we've got right now we got an 86 high. R1 is 97, so 40.97, 86 high, low 80 right now. Look at S1 is 74. I suspect we could see the 61 tested at S2 today. There should be some more downside. I'll show you the algos here in a minute on the daily, but it definitely looks like we're going to get some of those things to continue down there. So let's go back over to TradingView, and let me just let's go over to this is daily here, and this is what I was talking about. We were going to get down to this 40 period moving average. It looks like that's right now. That number is 40.62, so that lines up perfectly with that S2 number. So look for that. That should hold. But what the algos are suggesting is there's probably some relative weakness for at least 2 more sessions. Can we get down below this 40? It's possible. I think what I talked about last night, we get sandwiched between the 40 and the 10 period moving average, but now the 10 is accelerating. It's at 0.2174 right now, and it's just right at trend mode. Anything under minus 0.25 is trend mode down, and that tells us that the probabilities that we're going to stay under this 10 period moving average for several more days is really key. That's your major resistance, by the way, right now, which is way up at 41.42. It's not even in play at the moment. But what we are seeing here is this downward slope. And it looks like it will come. We've got probably coming into Monday of next week. Hopefully I'll be able to set this up when we come in tomorrow night after we see Thursday's action and set the pattern just a little bit better from that standpoint. But it's interesting just to see how this is starting to potentially set up and then maybe improve where we go back and we can test this 10 period moving average. But that's going to be Monday, Tuesday next week. So I would continue to watch this. We've got 2 days down now. We're probably going to get a third day down. So look for the low of yesterday at 68 to be taken out. And if we take out S2, then go to S3 again. We could see some pretty decent downside. And depending on how everything plays out, we're likely to see the pattern as far as play out to a little bit further before this banking. I'm sure they're going to be throwing a bunch of news stories out there around First Republic. And then, like I said, they've already got all the news stories loaded up. Everybody's got the same stories loaded up on the debt ceiling as well. So get ready for that stuff. Ultimately, we do have one of the things, I'll bring this up just a little bit. We do have a Fibonacci projection, which tells us that it's suggesting that we go down to the 200-day moving average, 39.77. The actual Fib target right now is 39.55. That's Fib target 1. These are valid targets, especially if we continue to see the deterioration of PPM1 and we start to get in a negative mode. That probably pushes the database under 42% in a material way, and we see some liquidation. And unfortunately, we end up back in the box again, just going sideways. I guess let me just bring up the weekly chart just to show you that box again. And yeah, just all the stories coming out that people are looking at this reaction here. We got up there again. We'll see how they hold. This is the key, and I brought up the weekly chart again. Is right now PPM actually turned negative after yesterday's action on a weekly. So we have a negative PPM1, and PPM2 is barely up 0.009. So basically it's flat. There's some, I would say probably a 40 to 60% chance of getting through that value, which is the 40.22. And then the next level below that is the 40, which puts us down into that 39 handle and starting to get toward that around that 200 day. I don't see us getting down to 200 week, but it looks like from the algo standpoint that we're going to get some stability here in the next couple of weeks. But it definitely looks like we actually could see, I'm leaning more towards seeing the 39 handle, high 39s now as things are starting to deteriorate. We'll see how markets set up tomorrow. All right, next we'll take a look at the NASDAQ. It's coming down very close to the support levels as well there. As I mentioned last night, we got 12,750, low yesterday, 12,800. So we came right down to that level. The algos are suggesting that we're going to have some stability here where we're going to stay in the trend mode on the weekly, at least for another week. So that suggests that we should hover around this 10-pair moving average. A lot of times what will happen in this type of configuration is that we'll see the market will oscillate around that, but follow the slope of that 10-week moving average. And the weekly averages have a lot more power, even though it looks like it has flattened out a lot. It's still at 0.39. Let me get that number. Yeah, it's actually 0.43 right now, but it looks like it's going to stay above. I was just looking at some of these numbers over the next couple of weeks. It's going to stay in trend mode. So we should remain around this 10-period moving average. It can go through it, but it's going to want to stay around there. That's going to be where the markets are likely to normalize as we come into that pattern. Let's go to the daily. And daily showing, well, just like with the S&P, we still have some downside. We did print down towards the 12,795. It goes with the 10-week, which is 12,750. So everything's lined up there. It looks like there's potentially, like I said, same thing with the S&P, a couple days down, and the pivot will be that 40-period moving average here, which is 12,750. If we take that out, then we'll be looking at some numbers down. I believe 12,200 would be the next level that we would be looking at from that standpoint. All right, so we'll go to RTY. It's also still drifting down, so it was stabilized here. We're coming down toward these lower levels here at 1701. I mentioned these fib targets last night. Fib target 2 right now is at 1722. 1750 was fib target 1. We've actually blown through that. We're just below it right now. Looks like fib target 2, 22, fib target 3, 1704. And if we go back over here to this low over here was 1703. So looks like a retest of the low setup. And same thing, a couple more days down. Looks like PPM2 is about to take out its second derivative. So everything's starting to move down. Let's take a quick look at the weekly chart. And so we're trading right now right at the STX level on the weekly, which is right now 1739. So we're trading just right at that right now. So pretty much an extreme. But you can see this downward slope of the 10-period moving average is actually accelerating here. And I never can figure out why the algos aren't working here on the, when I go to weekly on the Russell. It might not be enough data there. But anyway, this you can see the predicted pattern is showing that this moving average is going to continue down. So we'll probably retest that low. But all of these indexes are in this big box. They're in this sideways mode. And I think, like I've said over the last 2 sessions talking about this bank situation, there's just a ton of regional and community banks in here. In fact, let's just do something real quick. We'll do it right here on the patterns. Let's go to let's go to the KRE just to look at that regional bank index. It's trading, this is weekly here. It's trading down around its extreme as well. So we're coming down. Like I said, looks like we should stabilize here next couple of weeks. I think we'll ultimately try to get above this 10-period moving average. It really depends on whether how we trade in this pattern here. There could be a clear another leg down, and this is going to be the focus. The bears are going to be focused here, and this is probably enough, depending on what happens with this index, for it to continue to keep some downward negative sentiment out there. And like I said, everything from the standpoint of all the metrics that I watch are starting to deteriorate very quickly. Like I said, we have what, I'm just looking here, 72 plus 100 sell signals in the last 2 sessions. So things are coming apart really, really quick. And typically, if you are going to get some stability, you don't get those big tranche of orders like that. It's more methodical, kind of peeling off. But these are big tranches of orders on the short term. So there's definitely some interior deterioration going on in the markets right now. You know, they had everything geared up, just like this happens, folks. This is part of being in a trading range. Is we had everything geared up to break out, maybe take out 4,200, talk about 4,400 on the S&P, and then we get another failure here. And I'm surprised when I was out of town that the markets didn't collapse. That's usually what happens. And I did do a couple of Twitter spaces trying to fill the gaps in there. But this is going to continue to be a story. And I still don't see it as generating a major where thousands and thousands of banks are going to go out, and it's 2008. I think that's not the scenario. I made that clear. We're not in 2008. We are definitely 2023. So there's a lot of different elements and different factors you're going to have to pay attention to as we go forward. All right, so we'll go through the 10-year. It's coming down as I was talking. This is a weekly chart here. It still looks like there's more downside. I mentioned these fib targets. They're 3.30 and 3.16. 3.25 was we'll call it the low during all of the scuttlebutt around the banks. We got to, I'm just looking at these numbers here. Yeah, here it is. Yeah, so we get down to 325, 337 here, and then again here in March. This is where the lows came in at 429 and a half. Another low here at 25.30. So it looks like we're going to get a chance to actually challenge this. Everything looks like we're going to come down to another leg down. Like I said, I don't think there's a 2 handle in there, but you know, if things unwind, maybe they get some. I don't know why they would go down if the debt ceiling story starts to build. I think they would have the opposite effect. But the bottom line is that we're still got some downward move here. There seems to be a pretty good bid. Let's go over and look at the 2-year. Two-year tech, pretty good hit. Let's go to the daily just so we can get a little better perspective here. These are numbers I mentioned last night. We've got downward targets, 376, 350, 343. The low during in March was 355. So the minimum target would be a retest of this secondary low, but this fib target 2 is now pointing to the 355 level, which is a retest of the lows. And then there's one more fib target below that down to 3.43, and this is the 2-year on the daily. So it'll be interesting to see. The algos are suggesting that PPM1 is about to take out its second derivative. PPM2 is negative. It's rolling over. So everything is downside here for the interest rates. Even the 2 and the 30, I'm sorry, the 2 and the 10 are both looking to go down from this level. All right, so crude took a pretty good hit. I was talking about 76 holding. We went to 74. So definitely went a bit lower. I thought we would hold around this 40. We didn't. Let's go to the weekly real quick because I think we're going to need some help on this one from intermediate. So we went through these two averages I was looking at, but it looks like we should stabilize here. And I think this is the same scenario that I was talking about. We are negative 0.26 on ppm1. ppm2 right now is negative 0.53. So everything's down in crude. I don't think we could retest this 200 week, but it's certainly possible. It looks like to me that the algos are suggesting that we should start to stabilize here, but the downtrend is real. And you can see how let me open this up so you can see the moving average predictions here. So the algos on is showing that we should stabilize here and then start to move up. We'll see if that actually comes into play, but I would suspect that we're going to get back above here. That 76 number should be in play, and we'll come back to 76, maybe back to the 21, which is right now at right at 76.66. So 76, 78, we should come back into these averages. They're a little bit, not too much out of balance right now, but they are a bit out of balance from the standpoint of where this market wants to go. And like I said, right now, I'm going to go back to the daily here. There's no fib targets. There's nothing in here. So there's no patterns being picked up by the algos suggesting. In fact, you can see here, I'm back on a daily chart here. You can see that the algos are suggesting that we're going to stabilize, maybe move back towards the 10-period moving average, which is 78.33 right now. So gold next. Gold still got that downward slope 10 here. We're kind of this is actually a pretty good lesson in understanding these moving averages and the PPMs here. Is the decline here being projected by PPMs we're negative 0.26. We're in trend mode. So this is exactly how these things act. So we're trend down. Yesterday we traded above the 10 and closed back below it. And we should just continue to waffle with the 21-period moving average being a key resistance number right now, 1992. And last trade, let's see, 98 low. Yeah, so let me get this right value here. That is a target, not the moving average. That's 2010 is that number on the upside. Extreme downside right now, 1963. 65. So we should just continue to work this channel on the market grid. And going back to this RTX sell signal, we've been down ever since. And I think I talked about this last night. We get sandwiched between ultimately the 40 and the 10-period moving average, maybe even throw the 21 in there. But this should be the range where these moving averages are. We shouldn't drop much below this. And we're not going to go up at this moment. I'm just bringing up the weekly, and this kind of illustrates that uptrend on the intermediate. This would be somewhat similar to the 40-period moving average. So right now, 1951, I just mentioned it was 1963 on the 40. So we should see a stay above this. This will be your primary. When I see moving averages like this, what I would call a demand line. If you get down there, you're going to see folks interested in buying gold. If we print it down into anywhere under 1960, there's going to be a lot of stuff in there. The unfortunate thing is probably, which is detrimental to gold doing well, is Peter Schiff's probably very bullish right now. So last time he got really bullish, him and I forget, there was someone else was over here back in March a year ago. And when we printed, I'm just looking at the highs there, 2078. They were screaming bullish. They're screaming bullish again. So that's going to be, we're going to have to probably wash them out of the markets again. But I guess Peter's been bullish on gold for 20 years and whatever. But the point is, we're seeing that. So if we look at just the algos here on the weekly, is what we're seeing is that a couple of weeks from now, they're looking at taking out first, second derivative. That's not a good sign. That means we could start even a further correction on the downside here. And so it's going to get interesting, and it has, you would think with interest rates coming down, it didn't cover the dollar tonight, but I'll cover the dollar tomorrow night. And, but this is not looking all that positive at this time. All right, so Bitcoin got a little bounce here. We're back at 28.7. It was 29. It was up a little bit. We got up toward that upper end of the market grid, R3 29,558. Our RXT 30,169. We printed 30,114. So we almost got an RTX hit there, and this is on a weekly. And so the key level, though, and I mentioned this the other night, is this 10-period moving average here, 26.27, the low 26, I'll get this right, 26.728, low 26.938 on a weekly basis. We should continue to climb up. My expectation, if we can stay above the, we'll just say a 28,000 level for right now, if we stay above that into the weekly close, then we'll probably see the market grid turn up. And if that happens, then we're probably going to climb a little bit more here. And whether or not we start to talk about the whether or not the alternative asset play comes in, we'll see what comes into play with the equity markets as we go forward. Okay, folks, that's going to do it for tonight. Yeah, Ronald Ford, you're absolutely right. That's hilarious. Thank you for that comment. Really appreciate it. Yeah, so yeah, I think I'm just looking at some comments here real quick as we finish up. Yeah, and Pamela, I agree. Economists are dumber than bricks. They're dumber than bricks, and bricks are pretty dumb. Okay, so yeah, Bo, it's a little cheaper. It's $4.50 up here in the mountains, but I can see easily $5 again. Yeah, and it's interesting. If you look at this 76 print, we probably should be down 50 cents, but you're not going to see that printing. Anyway, folks, we'll just call it quits here for tonight. Thanks so much for being part of the channel, and make sure you subscribe, hit the like button before you leave, all that kind of stuff. And we'll be back tomorrow night at the same time. Make sure you have a good day trading, and we'll see you then. Thanks for watching.